Hold on, Trump's back. What's going to happen to Canadian housing and your mortgage rates? So if you're already stressed about housing prices or the roller coaster of interest rates, this might be a big one. Trump's win could trigger real effects here in Canada, and you'll want to know how it might impact your next move. So wondering if you'll need to hold off on buying that next dream house or selling your family home, or if rates are about to go wild? Trump's win has already shaken up the headlines. But what does it mean for us here in Canada? How might the US politics affect Canadian housing prices and interest rates? Well, you're in the right place. I'm breaking down the top things to watch out for so you can stay ahead in today's unpredictable market. Stick with me for the key insights to help you prepare no matter what's coming next. Hi, my name's Deirdre Dunn, and I'm a real estate broker. I've helped people with their real estate needs in the Waterloo and Wellington regions of Ontario for the last 10 years. I specialize in helping empty nesters downsize, helping to reduce the worry, anxiety, and overwhelm using my 5-step method I call your next chapter. So if you find this information helpful, I ask that you press the like and subscribe button so more people like you can see this video. So thanks. So whether you hate or love Donald J. Trump, policies are about to ultimately lead to lower mortgage rates in Canada in the long term. So with the Donald's election, we here in Canada can expect mortgage rates to come down as a result. Lower interest rates will make buying home more affordable. Better affordability means more buyers coming off the sidelines. So with enough interest, and real estate prices are really likely to increase in Southwest Ontario in the long term. In the short term, rates, there may be some fluctuations. But remember, back in 2020, Tiff Macklin said interest rates would stay low for a long time. Well, he mentioned until late 2023 or 2024. And back then in March 2022 was the beginning of 8 unprecedented consecutive Bank of Canada interest rate hikes. So most economists didn't predict that for the long-term mortgage rates to come down. So here's the thing. The beginning of this year, bank economists predicted 1 or 2 rate cuts. And to date, we've had 5 consecutive rate cuts by the Bank of Canada. And so those economists, their predictions are out the window so far this year. So how did I come to the conclusion about long-term mortgage rates? Well, I'm going to give you my thoughts as I weave in some data and stories for you. So to understand what's happening, we need to look at the bond yields. And with Trump's victory, it's going to ultimately make bond yields rise in the long term. Higher bond yields impact mortgage rates here in Canada. And here's how it all works. Variable rates follow the Bank of Canada overnight lending rates, and fixed rates follow the bond yields. So when you hear the Bank of Canada dropped its overnight lending rate by 0.5 percentage point, it means people with variable rate mortgages are affected. Their mortgage rate is tied to the Bank of Canada rate, and it means their variable rate dropped by 0.5%. Now, fixed rate mortgages are tied to something different. They're tied to the bond market, and the bond market is like a barometer for the cost of borrowing money. So when the bond market interest rates are lower, it represents that borrowing money is less expensive. So you're looking at a 5-year fixed mortgage rate, and the bond market at the time has lower interest rates. The bank then says the cost of that 5-year fixed mortgage is lower and the interest rate is lower. And as bond yields move up and down, so do fixed mortgage rates. So here's where Trump's presidency comes into play. Our bond market is tied to the US bond market. What happens in the US bond market affects the Canadian bond market, which affects fixed mortgage rates and affordability here in Southwest Ontario. So Trump's policies is expected to cause a deficit long term. He ran up the biggest deficit of any president in US history in his last term. So with his tax cuts, he's proposing to big business, the government needs revenue to keep things running. So that means the average person is going to pay for things. And to keep people happy, he's going to run some sort of deficit program. Less tax revenue means less money to spend. But the US is going to have some kind of quantitative easing, which means printing more money to inject into the system to counter the lack of revenue. So this ultimately leads to higher deficit, and the borrowing of money from the US Treasury will impact the bond yields. And as interest rates come down, the bond yield goes up, meaning the value of the bond is less. So the yield has to be higher to make it more attractive for someone to buy. Higher deficit, the value of the bond goes down, causing the bond yield to rise to compensate for the lower value of the bond. So our bonds are tied to what happens to the US bonds. The Canadian bond yields will go down, and Canadian fixed rates follow the bond yields. So what Trump does and how much deficit he runs will impact our economy and our mortgage rates. Our largest trading partner is the US. So short term, there's going to be volatility. But we need to see past that for the long term. The reason why 5-year fixed rates are down the start of the year in Canada is due to the Canadian bond market came down. It's not tied to any of the Bank of Canada's 5 consecutive rate decrease announcements. Where are variable rates? Well, they're mid to high 5%. Fixed rates are now in the low 4% range. The Bank of Canada rate announcements hasn't really moved the needle with buyers. It's priming the market with the sentiment that rates are coming down. So buyers are waiting for rates to come down even more so that they can afford more house. So here in Guelph, to give you an example, condo prices are up 4% from January of 2023. That's within the historic appreciation levels. Condos may be doing poorly in Toronto and elsewhere, but in Guelph, they're seeing a slow, steady growth. And as Trump sets up his cabinet and moves into the White House in January, it's likely the economy is gearing up for lower interest rates, which in turn will lower mortgage rates. So historically, lower mortgage rates mean more real estate becomes more affordable, creating more buyers coming off the sidelines. So more buyers in the marketplace puts more upward pressure on real estate prices. And the data and all signals are pointing to long-term mortgage rates coming down. So if Mr. Trump pushes more money into the banking system, no matter how he does this, it's definitely having an impact on mortgage rates here in Canada. So if you found this helpful, I ask that you press the like and subscribe button so that more people like you can see videos like this. See you in the next video.